Hello and welcome to Game of Trades. This is Peter, and today we're going to take a look at the stock market. It's been selling off this week. We're currently around 3.5% down from the all-time high. So in this video, we're going to be answering a couple of questions. Is this correction going to continue down? And if so, how far down can it go? And then we're going to take a look at the tech sector and discuss why the NASDAQ 100 is likely going to be the hardest hit in this correction. And that's what so far seems to be the case. During this sell-off, we're currently around 8.5% down from the all-time highs on the NASDAQ 100. And then we're going to take a quick look at the ARK Invest ETF and whether the massive rally that we've seen in these emerging technologies could be coming to an end and eventually bring the rest of the stock market down, the rest of the NASDAQ 100 down. That's what we're going to be discussing in this video. Now, if you haven't been following this channel for the past few weeks, we've been looking at this price channel right here. This is the weekly chart of the bull market that started in 2009 on the S&P 500. And it's been following this price channel throughout the past 10 years. And this is a trend line that institutional investors use to pick bottoms and pick tops. So we were looking at that a couple weeks ago, and so far we have been rejected off that trend line. So back to a daily chart throughout this entire period right here, just below that resistance level, we were saying on this YouTube channel and on gameoftrades.net with our members, we are in a neutral positioning. We're not taking long positions just under major resistance. That's pretty much the most basic technical analysis you can do when you've had a 21% rally off that bottom and you're coming into this long-term resistance. It's not the moment to be taking new long positions. We want to wait for a correction and potentially position on higher buying opportunities right here, like we did right here pre-election, just before all that uncertainty around the election was about to be cleared. We positioned here on that major breakout right there. That was an objective buying opportunity. We positioned back here on the breakout of this wedge right here, and that's all recorded on this YouTube channel. You can go and check those videos out. Not one video has been removed from our channel. And now we're still waiting for a buying opportunity on equities. And that's not something that we're ashamed of. If you want to be successful in your trading, it's important that you understand that you don't always need to be in a trade. You don't always need to know where the stock market's going. What you have to do is wait for the proper buying opportunities, and you can have high reward and low risk opportunities like here, like here, like here. Now on Twitter, on the 26th of February, we also posted this chart showing breadth divergence on the S&P 500, talking about a potential 10% pullback here, because that is just healthy price action. It's what you want to see during a healthy uptrend. By the way, if you're not following us on Twitter yet, make sure to go ahead and do that and subscribe to this channel if you haven't already. We post multiple videos a week on the stock market and on other opportunities where you can profit. We've also recently posted a job for a cryptocurrency market analyst. If you're interested in that, we are still taking in job applications. You can click the link in the description to go and check that out. So now let's get into the technical analysis of the S&P 500. This is a daily chart, and we've got this price channel here. We're actually going to go on an 8-hour chart to see that more clearly. We're still hanging on to that price channel support here. We're still above it. We had two brief candlestick tails here. Those are not breaks. So that's something that we're watching today, whether or not this support level holds. I've put up the RSI on this chart here, and you can see there's some divergence building here. We've got three lower lows on the price here, approaching that support level, and three higher lows here on the RSI. So we could still reverse here. If we do reverse, we could see another rally to tag that long-term resistance that I just showed you guys that would be sitting around right here. So we could see another rally to around 4,000 points right here. And if you want confirmation on that kind of a move, you can look at this downtrend line right here. That could provide a nice signal for a long trade. You've got this resistance level at 38.64. So if price manages to snap back up and get back above this trend line, get back above that support level, back test, that could trigger a nice rally to that long-term resistance. But for now, it's still looking like the S&P 500 is starting to form a downtrend. And if we break down here below that channel, right, we're very close to breaking that down. If we break down, the RSI will burn through those divergences and we'll be in sell-off mode. So we're really at a turning point right now. For you traders out there looking to short the market at these levels, it's a risky trade considering the uptrend that we're in and all the bullish sentiment that we have. But if you are looking for a short trade, you want to see a breakdown, backtest, resumption, and that's your entry here. That'd be a nice shorting opportunity to this level right here. That would be the first target of a breakdown from that price channel. Now let's take a look at how healthy the trend is, right? We're still above that price channel. So from a price action standpoint, it's still looking okay. But the MACD here is telling us a different story. You can see we're trending now below the zero line, right? It's a very easy indicator to use. We've been using it throughout the entire trend right here, telling us whether we should have a bullish bias when the MACD is above the zero line. So throughout this entire period, you have a bullish bias on the stock market. And in fact, we became neutral right here. We were bullish throughout this entire period. We became neutral here, but then the market snapped back up, but now we're back below, right? So the MACD is a pretty good indicator to capture those corrections right here. You can see the MACD dipped right there on the 6th of September below the zero line, and that captured the entire trend right here. But the point I'm trying to highlight is that we are seeing a trend start to break down. So on the MACD, it's really starting to break down here. Now, in terms of targets that we're looking at, we're back on that daily chart of the S&P 500 with that long term. We're going to identify the targets using this chart, right? Because we do have some long-term levels. That's what we're going to be paying attention to. So if we have that breakdown, right, which hasn't completely occurred yet, we're still within this price channel right here that I'm showing. If we break down, we're looking for a move to these three levels here. I've highlighted them. These are strong levels of support. And depending on the price action that we see along the way down, we will be looking for buying opportunities at one of these levels. So what do I mean by that, right? For example, right there, we had a nice wedge pattern that told us when you have a breakout, that's a buy signal, right? And that's a beautiful continuation pattern. We could have a similar scenario, right? If we start to sell off and make a nice wedge pattern like this, have some nice divergence, buy signal, that'd be a beautiful entry. So we'll be on the lookout for that. By the way, if you're so far enjoying this video, make sure to drop a like below. It really helps out our channel. And if not for the content, then you can do it for this amazing drawing. We really appreciate that, and it helps our channel out so much. Now let's take a look at the tech sector. As we said at the beginning of the video, it is the sector that's leading the sell-off right now. So first of all, let's take a look at the technical picture on the NASDAQ 100. And this is the main development currently happening on the NASDAQ right now. We have a head and shoulders pattern. So that is a topping pattern or a reversal pattern. Got a shoulder here, the head, and another shoulder. And you've got the neckline right here. And this is actually a tilted neckline. It's not horizontal. So that's actually a little bit more bearish than the classic horizontal head and shoulder pattern. Now, in the previous session, we actually started to break down below it. But if we take a look at the futures chart, you can see we're currently snapping back just above it, right? So this is the actual line right here on the futures chart. It's what we're paying attention to. We've got these reactions here, this reaction, and you can see right here, we opened up today's session just above that neckline. We so far dipped below it, but we're snapping back above. So we haven't broken just yet. So the market is really at a turning point right now. If we break down here, we're looking for a steep correction from current levels. All right, the measured target for a head and shoulders pattern is around the length of the head, and you take that to the break of the neckline, and it takes you to around the bottom of this channel. So that would be a nice buying opportunity on the NASDAQ 100. It's strong support, but if we break down below that, we're heading much lower. That would mean this is a long-term top, all right? So we'll be paying attention to the price here. We will have a bullish bias if we approach this level right here. Because if you look at the long-term chart on the NASDAQ 100, this is something we've looked at before. This is the price channel again of the bull market, very, very well defined. And so that support level of that price channel that I just highlighted would correspond around here. So that would be a back test of that major bull market price channel. So you can see we're dealing with some pretty big levels right here. And that's what you want to do with your analysis. These are the high probability levels. That's why we were pretty confident in our entries right here, because the NASDAQ was back testing that trend line. So if that happens again, we'll be looking for the exact same trade. Now, the reason why we're looking at the NASDAQ 100 in particular for a move down is because of interest rates. And what's been happening to interest rates, we've had a tremendous move up since the low here in August. We've had a 200% move up in interest rates. That's absolutely massive. It's unprecedented. We haven't seen a move like this in a long time on the 10-year yield. And so higher interest rates means lower growth expectations. And we know what the NASDAQ is. They're growth stocks. So they have high PE ratios. They're taking on a lot of debt to grow more quickly. But if interest rates are higher, those companies are going to have a harder time to keep those high valuations. And so the ARK Invest ETF, the innovation ETF, is a direct product of that. Interest rates came down to zero throughout the pandemic, and that gave the perfect environment for this bubble price action. In fact, that's something that we talked about on the Twitter again, and we're probably going to be making a YouTube video on that. The ARK Invest ETF is ticking all the boxes for a full-blown bubble. Massive amount of retail interest, extreme bullish sentiment, extreme valuations, right? We've got Tesla at over 400 PE ratios, Square, same thing. CRISPR, same thing. We've got Zillow at similar 400 plus PE ratios. And this is a rally that's unsustainable and that's purely based on speculation, right? Because of those low interest rates, you're able to borrow from the future. That's exactly what's happening. And in fact, you can see the ARK ETF has actually been leading the sell-off recently. Now, who knows if this is the top? That's the problem with bubbles. It's very, very difficult to pinpoint tops. But if we continue seeing emerging technologies have a hard time, it could pull the rest of the NASDAQ down, right? We've got this head and shoulder pattern, same thing as the NASDAQ. And so the measured target on that is massive, right? If we have a break on that in the next few sessions, that would be from current levels around a 25% drop in the ARK ETF. That would be extremely damaging to the retail investor community. It's unlike anything we've seen since the beginning of this rally. And all these new Robinhood traders have been flooding into this trade because that's been the outperformer in this post-health crisis world. So that's why we're big fans of not following the hype, not following what the rest of the 90% of retail traders are doing. Our focus back in 2020 was the coming bull market in commodities and emerging markets. And obviously since then, we've had commodities massively outperform, precious metals massively outperform. We've got coffee that recently made a breakout above some tough resistance right here, really starting to pick up some speed to the upside for another bull market in commodities. Emerging markets, since that article on gameoftrades.net broke out above its major bear market resistance here and started to go parabolic. So if you're interested in finding out more about our investment strategies and what we're looking at for opportunities, including cryptocurrencies that we've been bullish on since October with our Bitcoin bull market investment setup. If you're interested in all that, make sure to go and check out gameoftrades.net. We do have a free trial for the pro version, so you can check out our service. Now, that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.